Hey, it's Troy Moliot, and we are talking about the numbers on CREcalculator.com. We're going to go through the numbers on the Moore Street fourplex. This is the Moore Street fourplex right here. This is our offering memorandum. You're going to get a copy of this. This goes through all of the numbers that we did, how we put the deal together, and kind of the flyer, so to speak, offering memorandum. Fancy way for saying flyer. And this is going to be available for you. The one thing I put together, and the reason I got this particular client was from this note card. This is not the exact note card I sent out. I sent out previous properties to the client, and they came in with a stack of these cards of different properties I had listed and sold over the years. And they walked in and said, "Hey, we would like to talk to you, Troy." This note card got me a couple of fourplex listings that I sold for about $625,000 each. And we're going to go through those numbers now. So you will get that note card template, and we're going to go through every single thing on this now. So this is what the client came in. They brought in 3 years of income and expenses, and they brought me these details. I kind of analyzed them and ran my own spreadsheet analysis, which is over here on the right side of the screen. But you can do this even easier using my calculator. So we're going to go through this. The client was selling. We're gonna step one is essentially identify what type of investor we are, and the client is selling. They are selling a multifamily. We're gonna call this the Moore Street fourplex. And we're going to go to step two, just like that, pretty easy. So one thing we can do is we're going to estimate the income. What is the income? And this is a unique situation to where the owner came in, thought that their property was worth about $400,000. And I knew immediately that the property was massively under rented. And so we're going to show you the power of what about $320 a month per unit can do for a valuation. And when you get to step two, you can provide the details. You can provide them or you can not provide them. And so by checking the yes box, we can then say, hey, we've got some 2 bedrooms. We have 4 of them. They're 810 square feet, and they were renting for about $700 a month. And voila, just like that, the monthly and annual income is calculated. Our vacancy is running about 3%, and so we're going to put that in, and we're going to go to the next step. And then we're going to put in our actual expenses. And what I did is I kind of looked at their expenses. I summarized those expenses, and based on $700 a month, they were running right around $13,020 a year, or roughly 38.8%. And so by going to our valuation section, the 4th tab, and you'll see here on the right-hand side that we're creating the valuation scenario, the investment overview right here. So our market is right around a 5% cap for fourplexes. And if you see that 5% cap, that value was right around $400,000, $391,440 to be exact. But I knew that this was under rented. So what can I do? I can go right back to the income tab by pressing the income tab. Takes me right back here and say, wait a minute, these are $1,000 a month units. And so if I put in $1,000 a month and I hit the tab button, it's going to automatically, or click down here in one of these buttons, it's going to put in the new income of $4,000 a month, 48 grand a year. We hit the next tab. It's updated our investment overview here. We're going to go ahead and put in the income and expenses. And one thing I'm just doing here is I'm actually calculating what the management fees would be, because those do change based on what your rents are. So our new expenses are right around $13,718. So we're going to update those expenses. And you can do that manually by hitting yes and providing the details. But to save us some time, I am just going to hard code and put these in annually. So 13,718, which is right around 28%. If I go to the next step, you're going to see here that when I put in a 5% cap, And if I zero these out, I'm going to zero this out because I changed it. And then we're going to go ahead and put in a 5% cap. And then that value is going to come to be $656,000. And what we did is we started to market the property at a 5 1/4 cap. So, we put in a 5 1/4. We started the marketing the property at $625,000. And if I put that 625 in, it will automatically calculate that for me right here. You can see down here at the bottom that if I scroll this, if I scroll the property valuation bar to 4 3/4 cap, the value is 689. If I go up to a 7 cap, it's 465. So again, you can kind of play with that down here. But again, I knew that the property was worth about 6 1/4 at a 5 1/4 cap. And the client was ecstatic. Obviously, it was worth well over a couple $100,000. And again, there's 2 fourplexes. So we were able to get them another $400,000 on their 2 properties, $200,000 more each. If I click go to the next step, it's going to take me now to the debt assumptions and then ultimately to a cash flow analysis that we're going to do. And for many of you, you may not have seen this. And I think this is going to be a great tool. It's going to help you get listings. So down payment, we assumed a 25% down, $156,000 on 6 1/4. The interest rate was 4%, and it was a 30-year amortization. And voila, just like that, it's calculated our monthly payment and our annual debt service, our debt coverage ratio, all those numbers that our banker likes to see. When we go to the next step, we're now going to assume that over the next 10 years, what is the property going to do? So we assume that the rents are going to grow at 3% and that the expenses are going to grow at the same amount, 3%. Then we have to sell the property in 10 years. And we assume a cap rate at the sale. At any time you don't know what something is, you highlight on this little question mark here and it'll tell you, hey, enter your property, enter what you estimate the cap rate you'll be. When you sell the property, conservatively, we estimate at a 0.5% higher than what you bought it at. So what it did is it defaulted our 5 1/4 cap to be 5 3/4 cap. I am not going to modify that. I'm going to keep it exactly the way it is, and I'm going to go to the next step, and voila, just like that, we have ourselves a 10-year cash flow analysis. And you're going to be able to save this as a PDF. I'll show you that in a minute, but here's what we are seeing right now. We are seeing 10 years of cash flow. Year 1, $46,560. Our cash on cash return on that 126 grand we put down, a measly 3.8%. But after we calculate principal reduction, and here is our principal reduction every single year for the next 10 years, we see that our cash on cash return with principal reduction is 9%, growing into double digits as we get years and years out, further out. And then what we do is we see that there is an internal rate of return of just shy of 15%. And that is essentially a total return on an annual basis, assuming that we buy the property for $625,000, that we sell it at the end based on the year 11 income at a 5 3/4 cap, and we enjoy all the cash flow and the principal reduction over that time period. So it's really an artificial number, but it's a great indicator for you to analyze investments. And I really think that, again, on a fourplex like this, and again, your market's going to vary market by market based on what you can borrow money at, what your debt's at, and what your cap rates are at. So it's really going to vary. And again, something in the, mid 15, 18% range is pretty good. If you're doing a development, and we'll have another scenario on that, that number's got to be much higher to take advantage of that risk and that value creation that you're doing. At the very, very bottom of this, you're going to be able to email this session. So you're just going to call this, hey, the Moore Street fourplex. If I can type, and then I'm going to put in my email address here, and I agree to the terms and services if I reviewed them, and I hit send and save, and voila, just like that, in my inbox is a very nice PDF of exactly that entire session, that cash flow analysis, that investment overview for you to use in your listing presentations, to show your client a variety of different things. And again, this is going to help you sell investment analysis, the investment properties, do analysis for clients day in and day out. It's going to provide tons of opportunities for you. And this thing is all here for you, ready to move free of charge. So I hope you've enjoyed this session on investment analysis. This was the Moore Street fourplex that we did, again, based on this note card. I got this listing, sold this thing for we sold it for $620,000. We started at $650. We knew that was a little high. We got about $620,000. So again, the client was ecstatic. They got over $440,000 more than they were expecting, and it was a great thing. It was a win-win situation. The buyer loved it. The seller loved it. I obviously brokered it, and I loved it as well. So hope you've enjoyed this session. Again, this note card got me in this particular deal, the total commission on this deal. I'm going to run this for you. $620,000, 620 grand times 2. That total purchase price was $1,240,000. That commission was $31,000. So this note card, I'm going to call the $31,000 note card, because that's what I made on this particular sale. And again, if you're looking to increase your revenue, to potentially take your investment analysis game to the next level, we've got some great tools for you. So thanks for joining us here at CRE. Hope you have a great day.